I think that before diving into the main topic, it's important to understand who is speaking. My name is Alexander, and I have been familiar with foreign real estate since 2011. I've lived in several seaside countries. For a certain period, I sold real estate as an agent, but in recent years, I've primarily been buying it for myself, renovating it, and eventually selling it. I believe that this ownership experience is the most valuable thing I can share in this video. The markets I am familiar with and have worked in include the real estate markets of Bulgaria and Sochi. I have also worked in Cyprus. I study, buy, and sell real estate in Georgia. In parallel, I am exploring the real estate markets of Turkey and the United Arab Emirates. What have I managed to achieve over these 13 years? I have successfully sold all the properties I purchased for myself at a profit. As far as I know, none of the deals I facilitated for others resulted in losses, even in cases of urgent sales. Perhaps I should dedicate a separate video to explain how I manage this. However, the real question here is how most people can avoid becoming poorer when buying seaside properties. First, let me clarify, buying foreign real estate won't make you a millionaire. If someone is looking for a quick solution, those opportunities likely lie elsewhere. Typically, people buy the cheapest properties available. In reality, not necessarily the cheapest, but properties that match their budget. As a rule, they try to make their first deal the smallest one possible. This often leads to a number of problems, including the fact that people end up poorer after such transactions. The information I use for my research can be divided into two categories: open and closed sources. Closed sources include my colleagues in real estate from other countries, with whom I correspond and exchange information. Additionally, questions from people who contact me on WhatsApp are another example of closed sources. Since I've been running my channel for quite some time, over the past 6 years, I've been asked about Batumi real estate tens of thousands of times. As for open sources, they include the videos I create on my channel about new developments and periodically videos about secondary real estate. Another type of open source includes major real estate portals in Georgia, such as MyHome and ss.ge. Moreover, there are specific analytical websites that aggregate data quickly from all real estate portals, not only in Georgia but globally. In every country, there are platforms for property listings. For example, in Russia, most people would search on Avito or regional platforms, while in Bulgaria, it's imot.bg. From these portals, general analytics are compiled and made available. Such analytics typically cost about $30 per month, and I occasionally purchase these services to orient myself in the market. Another significant analytical tool I use is the statistics published by governments. By analyzing events and news from the past year in a given country, one can roughly predict what might happen in the coming years. These are usually economic reports published by ministries of statistics. Georgia, for instance, also has such reports available, as does every country. They usually highlight key indicators such as GDP growth. In the UAE, there is an even more advanced system that allows you to monitor order flows for specific buildings. This helps you understand how property prices change based on recent transactions in a particular building. This is essentially an ideal system. However, when analyzing Georgian real estate, considerably more effort is required. Nevertheless, by using all these open and closed sources, you can build a fairly clear picture in your mind of what to do next and why. The primary problem with foreign real estate is that while it can preserve your capital, it rarely makes you significantly wealthier. Throughout my work in this field, particularly in Sochi, I have encountered numerous investors. In Sochi, practically anyone with 30 million rubles for one apartment could already be considered a reasonably significant investor. At the time I worked there, the dollar to ruble exchange rate wasn't 97 as it is now, it was around 56. In other words, someone with $600,000 could afford a good apartment in the center of Sochi. It turns out that people who invested money in real estate, regardless of the amount, usually did so with a reasonable approach. They weren't expecting to become extremely wealthy from it. Instead, they sought to preserve their capital, protect it, and use it in the future. On the other hand, some so-called investors attempted to double their capital in no time. While this is theoretically possible, it requires an extraordinary combination of market analysis and luck, something that is inaccessible to more than 90% of people. On average, based on my analysis and all the strategies I've employed in foreign real estate, the annual returns I achieve hover around 30% on invested capital. This figure outpaces the average growth rate of real estate prices in most markets, particularly when averaged across an entire country. If you think about it, who spreads these myths about foreign real estate being extremely profitable with absurdly high returns and countless other benefits? Naturally, it's the people who directly benefit from such beliefs. These are usually agents, developers, or intermediaries. Yes, markets may rise, but it's essential to approach them with a clear understanding. For instance, if you walk through a city like Tbilisi, you'll notice that demand remains relatively stable. Overall trends of growth or decline become clearer only over a 5-year horizon. Shorter-term annual analytics are far less reliable. One observation I've made while studying markets across different countries is that if you buy a property with the help of one real estate agent, you're likely to sell it with a different agent. If the first agent was overly optimistic, the second will probably be extremely pessimistic. This isn't always the case, but it's a fairly consistent pattern. When I worked in Sochi, I noticed that this city had some of the wildest fluctuations in the resort real estate sector. The agency I worked for was one of the largest, which meant I interacted with many agents both within and outside our company. Based on my observations, only about 10% of the people entering the industry could be called professionals. The The remaining 90% were essentially amateurs who came into the field during times of rising demand, hoping to make quick money. This pattern is not unique to Sochi. I've observed similar trends in Georgia and Bulgaria. If you plan to buy a property in a resort area, you must carefully think through how it will be sold, under what conditions, and to whom. Most people don't consider these aspects, which leads to poor decisions. Resort real estate markets typically operate in waves. The larger the city, the smoother and more stable the market trends. In resort towns, however, seasonal dynamics come into play, with sharp peaks in demand during summer vacation months. Certain factors can also create short-term spikes in demand. For example, in Sochi, a construction moratorium led to a sudden surge in interest. Events like this occur periodically every 2 to 3 years in resort towns, creating moments of extraordinary demand. Those who own properties and wait for such moments tend to profit significantly. Conversely, people who purchased a year ago and attempt to sell properties in unfinished buildings often find themselves forced to offer significant discounts, even if market prices have risen slightly. If we compare this to a larger city like Moscow, the market infrastructure there is far more developed. In Moscow, if you list your property with one real estate specialist, the news about it will quickly spread among other agents, even in a city as large as Moscow. This happens thanks to a combination of group chats, common platforms, and software tools that scrape listings from websites. In resort towns like Batumi or Sochi, the situation is entirely different. The real estate market in these areas is not as interconnected and agents don't communicate as effectively. As a result, selling an unfinished property in Batumi is significantly more challenging than in Moscow. In Batumi, the market is essentially split into finished properties ready for renovations and those still under construction. Selling a property in an unfinished building often requires deep discounts to attract buyers, as most people prefer buying directly from developers at competitive prices. One of the primary reasons people lose money in foreign real estate is underestimating additional costs. Taxes on property purchases, for example, range from 3% to 5% depending on the country. If you buy a property for $100,000, you might end up paying $105,000 after including these taxes. While this may seem obvious, I've encountered many buyers who overlook such expenses. They often claim to have broken even on their investment, only to realize later that they actually lost 5% due to taxes and fees. Another underestimated expense is maintenance costs. For instance, in Bulgaria, resort properties are often subject to maintenance fees ranging from 500 to 800 euros per year. Over 10 years, this can add up to 40% of the property's initial value, severely impacting its profitability. These figures don't even account for currency fluctuations or renovation costs. Another factor that often leads to financial losses is the commission structure of real estate agents. Some agents add substantial markups to the price of a property. For example, if the owner is ready to sell a property for $10,000, an agent might list it for $11,000 and pocket the extra $1,000 as commission. While this practice is common, many buyers are unaware of it and end up overpaying. To avoid this, you need to clarify the terms of the commission with the agent before proceeding. If the agent tells you the property is priced at $45,000 while other similar properties in the same area are listed for $50,000, they should provide at least 5 comparable listings to justify their claim. In 90% of cases, agents who demand excessive commissions will lead you into non-market deals, often resulting in financial losses. When you ask an agent directly about their commission, they may either lie or reluctantly tell you the truth. If you discover later that the commission they disclosed was inaccurate, this is grounds to terminate their services immediately. A dishonest agent is essentially a fraudster, and parting ways with them is the best decision. When purchasing foreign real estate, it's crucial to plan for how you'll eventually resell it. This includes considering who your potential buyers will be, under what conditions you might need to sell, and the timeline for achieving profitability. In my experience, properties designed for year-round living consistently outperform those built for seasonal use. They sell faster, appreciate more steadily in value, and attract a broader range of buyers. On the other hand, properties marketed as investment opportunities often fail to deliver on their promises, leaving owners struggling to recoup their costs. Another common mistake that leads to financial losses is opting for properties with developer-provided renovations. In resort areas like Sochi, Cyprus, or Bulgaria, developers often offer quick and inexpensive renovation packages as part of their marketing strategy. While these renovations help maintain cleanliness in communal areas after the building is completed, they are typically low quality, using cheap materials and appliances. In most cases, such renovations are not suitable for long-term living. Even after investing in upgrades to improve the property's appearance or functionality, these properties often fail to meet market standards. This approach works only if your goal is to rent out the property for short-term stays during the tourist season. However, for buyers looking to own or resell the property at a profit, such renovations are rarely a good investment. If you are considering purchasing a renovated property, it's essential to evaluate its profitability by applying a simple rule. Divide the monthly rental income by the property's price. For a property to be a worthwhile investment, the monthly rent should amount to at least 0.6% of its purchase price. If it falls below this threshold, it's likely not a profitable deal. One way I analyze rental profitability is by studying global statistics. Across the world, average gross rental yields range between 4% and 7% annually, with some markets offering higher or lower returns. In Georgia, for example, rental yields in Batumi reached as high as 1.5% per month, 18% annually, during a peak 2 years ago. However, this was achievable only for properties purchased before the 2022 boom. Using this approach, you can estimate a property's potential profitability. For example, even in a poor-performing year, Batumi properties yielded an average of 8%, with typical returns hovering around 12%. Exceptional years like 2022 and 2023 saw property prices spike by up to 50%. With such calculations, an investor can achieve a combined annual return of around 15%, including rental income and property appreciation. Currency fluctuations are another factor that can significantly impact profitability. For instance, I once earned money in Russia and used it to purchase a property in Bulgaria when the exchange rate was 40 rubles to 1 euro. I sold the property in 2014 during an urgent sale, earning virtually no profit in euros. However, the euro had risen to nearly 100 rubles at the time, doubling my returns when converted back to rubles. On the other hand, when the currency of your income depreciates relative to the currency of your investment, your returns can shrink or even turn negative. This is an essential risk to consider, especially for investors working across multiple currencies. Most investors fail to think about a backup plan when purchasing property. My own model for real estate investment always includes a fallback option. I can live in the property myself if necessary. If I relocate, I can rent it out for approximately the same amount I'd need to cover its costs. However, for people who buy properties they don't plan to live in, the lack of a backup plan often forces them to sell quickly. These rushed sales typically require significant discounts, resulting in little to no profit. In some cases, investors end up selling for the same amount they paid, entirely neglecting inflation and other costs incurred during their ownership. The tools I use to analyze real estate markets often borrow concepts from faster-moving markets, such as stock exchanges or cryptocurrencies. While real estate is a slower market, applying technical analysis tools from these fields can yield valuable insights. For instance, by studying global trends, I can identify which markets are likely to experience the highest growth in rental yields or property appreciation. However, these insights are only valuable if you understand the specific market you're investing in. Blindly chasing higher returns in unfamiliar markets is a recipe for disaster. While professionals in the industry earn returns of 25% or more, inexperienced investors often lose money or barely break even. I personally value the Georgian real estate market for several reasons. First, the barrier to entry is relatively low with properties available at modest prices. Second, the returns in Georgia often exceed the global average. However, as with any resort market, liquidity depends heavily on seasonal trends and overall demand. For instance, while the UAE has a well-developed rental infrastructure and robust systems for tracking market trends, its high purchase prices mean that returns are often comparable to or even lower than those in Georgia. In Batumi, investors can achieve similar or higher returns with far smaller investments. When investing in foreign real estate, the most important rule is to think critically and independently. Do not blindly trust experts or real estate agents who are primarily motivated by commissions. While agents may claim to prioritize your success, their interest often ends once the deal is closed. The key to successful investing is to view all external information as supplementary. Always evaluate its source and ensure it aligns with your goals. By doing so, you can make informed decisions, protect your capital from inflation, and potentially grow your wealth over time. Thank you for your attention, and I hope to see you by the sea.